Hey everyone, it's Pete Carmasino here at Chaikin Analytics. This is our halftime show on StockCharts TV. We do this each and every week, right around 1:15, exactly at 1:15, and on Mondays. And we kind of just go over the markets a little bit in the beginning. And I'm going to look at some names that are also breaking down. Obviously, we've had a pretty rough couple of days here, and currently today, markets are a little bit under pressure, a little follow through from Friday's big down day after Powell's remarks. And so, look, we've been calling out different levels on the S&P now for several weeks, months, even well over a year. And looking at each particular level on a technical basis, things are obviously playing out. The 200-day, which was around 4,300, was a major area of resistance. You had low liquidity over the summer months. The market, the S&P in general, and other markets as well, NASDAQ and Dow included, had the ability to kind of rise higher with really a lack of selling. Coming into this particular meeting with the Fed Chair Powell at the Jackson Hole Symposium, that really kind of takes the place of a Fed meeting. They don't call it a Fed meeting, but it kind of does, because look what happened on Friday. And it's like that almost every year. There's always something that comes out of that particular meeting that's worth newsworthy or worth noting and kind of thinking about. And here, I don't think it's any different. I think this was tough love, and I think the market needed it, really. I put some notes out there. As I say, you should follow me on Twitter. You can find me on LinkedIn, here on StockCharts TV as well. I'll periodically post things during the week, and I was saying this was a tough love event. Sometimes we don't like to hear that, right? The truth hurts. It may not be optimal for us from a short-term perspective, so to speak, as investors or even as traders, depending upon which way you happen to be leaning. But you've got to be prepared, and risk management is part of this game. If you're not running a risk management sort of discipline or have some tools that can help you, like the Chaikin Power Gauge, like StockCharts, ACP's platform, you're kind of just flying blind. Obviously, you're here listening to this, so you have either one or both of the tools at your disposal. And if you don't, go check them out. And that's kind of what this is all about, right? Trying to educate, kind of follow some things, and make sure that you understand not only just the market and individual names. We have to look at the macro environment. What's happening? Did we really think rates were going to stop going higher? We're just imagining a pivot just a few weeks ago or a month ago or so. I think so. I think that's what happened. I think the market kind of got ahead of itself, and I think the Fed kind of pulled it right back into kind of a reality check. And so looking today, obviously, we're lower across the board right now. It's been volatile in the morning already. Rate 40-40 has been really an area of resistance, and I think that's going to, 40-40 to 40-50 really is going to be an area that needs to be surpassed to move back higher above 4,100 if it can. 4,100 is going to be a test again on the upside. On the downside, if we break 40-20 to 40 to 4,000 or so, we can probably see lower levels. And I say significantly lower. I think anything below 39.80, I think we may have an issue. So we're just going to have to see what happens. I mean, we have to let this play out. We can't make that prediction and obviously make any moves until it happens. We have to react to it. Unfortunately, that's part of this game as well. So let's take a look at some names. We're going to go over the market a little bit, just some charts that I typically like to look at on a weekly basis, and then we'll get into some names that look like they could be breaking down. All right, everybody, we're here at the charts. Kind of the way we do this every week is a little bit of a commentary, kind of overview what's going on, and just kind of put a theme here to today's video. And the theme is really the markets are uncomfortable, right? After the remarks from Powell, things changed a little bit, and you can kind of see, I'm looking at markets right now trading right around 40.27 at the time of this recording. And, I think the remarks put people on edge, but it also kind of stopped the market in its tracks. And I think that was well needed. I think markets were getting ahead of themselves. And I think that's kind of what happened. We had to really experience that tough love, as I say. I can't think of a better explanation of it, but it is a reality check in general as well. And I think that's kind of what's happening. He needed to slow the market down a little bit. He needed to prove there was no real pivot. It was an imaginary thing. I think it was more wishful thinking than anything. the current markets are in a volatile mode. I mean, that there's just no other way to say it, and it's probably going to be that way. Unfortunately, the path, directionally speaking, looks to be signaling some lower levels here, and that's especially if 4,000, as I mentioned earlier, if 4,000 is broke. We got there close overnight. I think it was pre-market 4,003 or so, 4,006, and if that's broken, if it has to be broken significantly, and I would think that's 39.80 or lower as at a close there, and you're going to start hitting some typical levels. Ultimately, maybe 3,800 could be seen, but from there, it's just going to depend on data, and that's kind of what the Fed's telling us too. So I think that kind of goes hand in hand with what's happening. This is data dependent. Earnings have been very good. I mean, look, there have been some really strong earnings. There have been some really big misses. There had been some earnings beats with bad guidance. You had a really a mixed bag, sort of a grocery list of the different types of earnings here, from A to Z. So it's hard to read the markets when that happens. It's kind of a tough tape. So here's the calendar coming forward. Tomorrow, really, the Case-Shiller home price index is going to be certainly interesting. Consumer confidence probably got a little shaky over the last week or two, so that could change slightly. Crude inventories are definitely going to be interesting. But really, Wednesday, it looks like the employment report from ADP. GDP in Canada is coming out, obviously. That's interesting, but not that big of a factor here for us. But the mortgage purchase applications from the Mortgage Banking Association, from MBA, that's going to be interesting. I think it's going to affect a lot of things. And then, of course, Thursday, a big Thursday here, building permits, manufacturing PMI, building permits in Canada, jobless claims, productivity, continuing claims, unit labor costs, all of those things, manufacturing index. That's going to be a big day. And then the big day, really, the one that people are going to be watching, non-farm payrolls on Friday. So we got a new month. That means we got a new report. And we're talking about, what are we talking about? We're talking about end of summer, right? So here we go. Indexes at a glance, just kind of looking at, or should I say sectors at a glance. The index here is the S&P. Obviously, you can see where that's sitting at around that 200, about around that 20-day mark. And you're looking at, a lot of different sectors just breaking down. The healthcare sector is the one I called out. I think it was either online or in one of the videos, that it was starting to break down a little bit, and it really did. Kind of disappointing, because it is a defensive sector. Now, XLP is as well. That also broke down. XLK we knew was kind of going to be under pressure if rates going to continue to be higher. Industrials were already in a downtrend. Materials were kind of sideways. And utilities have been a great spot. Really, that's been an interesting place to play, but we'll have to keep looking what's going on. There was the chart from last week that we posted. We said 4,300 was that neckline. It kind of obviously rolled over, and we said 4,100 was going to get in the way, and this is what happened. Basically, this is this morning's chart. I don't know what time exactly, right around 10:45 when I took the snapshot. Year-to-date performance. I love looking at this because it's just a reminder that the only two sectors that are up this year are energy and utilities. So energy is what? An inflation hedge. And look how much it's outperformed. That says 52% year to date, just giving you that number. So in case you're having trouble reading it. And the worst performing sector was communication services, down almost 28%. What an amazing bifurcation here in performance. So just keep that in mind. Real quick, looking at the rally 1, 2, and 3, we talk about this all the time. There's your bullish percent. It started to roll over on the indexes, and obviously there's that pre-pandemic high of 33.93. A lot of people using this as an area of potential target, and I'm no different. So I think that's kind of where it's headed. I don't know for sure. I wish I did. But when you start to count these rallies up and look at how they've performed, you're looking at an average rally of around 12% in this bear market so far. So, and I'm looking on a weekly basis. So somebody might be looking at it differently, but I'm trying to capture the highs and the lows based off of weekly performance. And that's kind of what I'm getting at, right around that 11 or 12% average bear market rally. The FANG index has kind of rolled over. We talked about it, where it had, a 26% drop from the area of what we thought was support, which it turned out to be. and obviously about a 43% drawdown from the top. Now, it's not there now. It's kind of sideways, but it's definitely in a downtrend. Sentiment is obviously negative. You can look at the American Association of Individual Investors. That's on Twitter as well. And that's all I have for that. We're going to jump in the charts real quick and kind of look at the names that are starting to break down. All right, we're going to start off with Yum Brands, which was the name I called out last week that was starting to break down last Monday. And obviously, we can see what happened here. It's now below those bands. It's way oversold, but that relative strength is what kind of alerted me to kind of look out for that. And the other one was, I believe, Budweiser, Anheuser-Busch. I can't not say Budweiser for some reason. Also, I mean, stock's pretty well planted today. It's not really moving much, but it did also break down. But you've got a massive negative relative strength change there. So I just wanted to point those two names out. Here are some names that look to be kind of setting up in the same area. Now, not so much negative relative strength here on this particular name, but don't forget what they do. They are a distributor and and a wholesaler, really a wholesaler distribution of industrial and construction supplies. Obviously, that's under pressure with higher rates, and you're starting to see these patterns start to break down. And this is really getting to a negative relative strength. For us, it's a negative. It's anything below 0.5. That's kind of the way we measure it, and it's right there. Kind of hit a new low in the last week here this morning, and kind of finding a little bit of support. But I'm not totally convinced on that. So that's one I wanted to point out. The other one is Fidelity National. That's an IT service company. Now we're looking at an oversold buy here. Now this is where I just like to point this out because you're getting sort of potentially false positives here. I got a negative relative strength and I'm breaking down, but I'm in what's the sector I'm in here? IT services. And so they're talking about technology for merchants, banks, and capital markets. So is that area kind of slowing down? Some parts of it are. And you got to be careful and understand the industry. Even though it says strong industry, the trend is slightly weak. So we're getting sort of polar opposite setups here, where from a value standpoint, it looks sort of cheap, but from a technical basis, it kind of looks like it's trending lower. So you got to be careful with that. AON, which is really in the insurance business, also with a negative relative strength breakdown. Now, this one has been really fighting its breakdown back and forth. I mean, the markets do like names like this because from a valuation standpoint, they might get a little bit better priced, but from a PE and a yield, there's not much attractiveness here. And we are bearish on the name. And that just changed this week. So again, one to either take note of, protect yourself on, find some areas that you might want to consider as areas of exit, not so much entry. And, just be cognizant of what the recent lows were, which were 250 from 282. It was a nice run up, 50 points up to 300 or so from the bottom there. But you got to be cognizant. This is showing lower highs. And it looks to me, again, from our charts, it looks like it's going to maybe continue on the downside. Dollar Tree, obviously some terrible earnings reports. And look at the negative change in trend. Now, this is violent. This is a very significant change. Obviously, it feels like you might be late to the party here, but don't forget, I mean, the lows can see 100 to 110. And a few other names that maybe not be, aren't going to be that popular of a name. Physician Realty is an equity REIT, and the other one is RADI, which is Radius Global Infrastructure. Now, that's a particular telecom name. Again, sideways to down, weak stock and weak industry, not looking good right now. Okay, everybody, that's all we have for today. I really appreciate you tuning in, and everyone take care. We'll be back next Monday here on Halftime Show with Chaikin Analytics on StockCharts TV.